Cryptocurrencies have become increasingly popular in recent years as more people look for alternative investment opportunities. While there are risks involved in investing in cryptocurrencies, it is possible to make money in this market. In this article, we will provide you with tips and tricks to increase your chances of getting rich with crypto. 1. Do your research. Before investing in cryptocurrencies, it's important to do your research and educate yourself on the market. This includes understanding the technology behind cryptocurrencies, the various coins and tokens available, and the overall market trends. You should also stay up to date with the latest news and developments in the industry. One way to research cryptocurrencies is to join online forums and social media groups dedicated to the topic. You can also read white papers and other technical documentation for individual coins and tokens to gain a better understanding of their underlying technology. 2. Diversify your portfolio. Diversifying your cryptocurrency portfolio can help reduce your risk and potentially increase your returns. This means investing in a variety of coins and tokens, rather than putting all your money into one asset. This can help to balance out the highs and lows of individual assets and reduce the overall risk of your portfolio. It's important to note that diversification does not guarantee profits or prevent losses, but it can help to mitigate risk. 3. Follow market trends. One way to potentially increase your chances of making money in the cryptocurrency market is to follow market trends. This involves monitoring the market for patterns and trends and adjusting your investment strategy accordingly. For example, if a particular coin or token is experiencing a surge in value, it may be worth considering investing in it. Conversely, if a particular asset is experiencing a decline in value, it may be wise to sell or avoid investing in it. 4. Use technical analysis. Technical analysis involves analyzing price charts and other technical indicators to identify patterns and trends in the market. This can help you to make informed investment decisions based on historical market data. There are several technical analysis tools and resources available, including charting software and online trading platforms. It's important to understand the limitations of technical analysis, however, as it does not take into account fundamental factors that can impact the market. 5. Set realistic expectations. While it is possible to make money in the cryptocurrency market, it's important to set realistic expectations. Cryptocurrencies are a highly volatile and risky investment, and there are no guarantees of returns. It's important to only invest what you can afford to lose and to avoid making emotional decisions based on market fluctuations. It's also important to be patient and to avoid chasing short-term gains. 6. Use dollar cost averaging. Dollar cost averaging is a strategy where you invest a fixed amount of money into cryptocurrencies at regular intervals, regardless of market conditions. This can help you to take advantage of market fluctuations and potentially increase your returns over time. For example, if you decide to invest $100 in a particular cryptocurrency every month, you will buy more of the asset when the price is low and less when the price is high. This can help to smooth out the highs and lows of the market and reduce the overall risk of your investments. 7. Seek professional advice. If you're new to the cryptocurrency market, or if you're unsure about how to invest, it's a good idea to seek professional advice. A financial advisor or investment professional can provide you with valuable insights and advice on how to invest in cryptocurrencies and how to manage your portfolio. Overall, getting rich with crypto requires patience, research, and careful investment strategies. By following these tips and tricks, you can potentially increase your chances of making money in the cryptocurrency market. However, it's important to remember that there are no guarantees in investing, and it's important to only invest what you can afford to lose.